Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is June 9th, 2025, and we're diving into the latest earnings report from Graham Corporation, a leader in mission-critical fluid, power, heat transfer, and vacuum technologies. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Graham Corporation has just released their fourth quarter and full year fiscal 2025 results, and there's a lot to unpack, from revenue growth to strategic initiatives.
Revenue and profitability overview. Let's start with the top line. Graham Corporation reported a net revenue of $59.3 million for the fourth quarter, which is a 21% increase compared to last year. John, can you shed some light on this impressive growth?
Absolutely. The revenue growth was driven by strong performance across all markets, particularly in defense and space. The gross margin also expanded by 110 basis points to 27.0%, reflecting better execution and improved pricing strategies. This has significantly boosted their net income to $4.4 million, a 228% increase from the previous year.
And how did they fare in terms of earnings per share?
Graham Corporation reported an adjusted EPS of 43 cents, which is a substantial beat against the forecasted 26 cents. This indicates strong operational performance and effective cost management.
Strategic initiatives and market expansion. Moving on to strategic initiatives, Graham Corporation has shown significant growth in their key markets. Can you elaborate on their performance in the defense and space sectors?
Certainly. For fiscal 2025, sales grew by 13%, with the defense market seeing a 23% increase due to new and existing programs. The space industry also saw an 11% rise, partly due to the acquisition of P3 Technologies. Their record backlog of $412.3 million provides a strong foundation for future growth.
What does this mean for their strategic positioning?
It means Graham is well-positioned to capitalize on future opportunities, especially with their focus on high-return projects and expanding capabilities in key markets.
Operational efficiencies and future outlook. John, let's discuss operational efficiencies. Graham Corporation's operating margin for the fourth quarter improved significantly. What were the key drivers?
The operating margin increased to 9.3%, up 620 basis points from the previous year. This was driven by better execution, improved pricing, and operational efficiencies. Additionally, cash flow from operations was strong at $24.3 million, supporting their strategic investments.
And looking ahead, what guidance has Graham provided for fiscal 2026?
Graham has initiated fiscal 2026 guidance with expected revenue between $225 million and $235 million, reflecting a 10% increase at the midpoint. They are also undergoing a CEO transition, with Daniel J. Thoren moving to executive chairman, which should provide continuity in leadership.
Key takeaways. In summary, Graham Corporation has delivered a strong performance in fiscal 2025 with significant revenue growth and profitability improvements. Their strategic initiatives and market expansions position them well for future success. John, any final thoughts?
Graham's robust financial performance and strategic focus on high-growth markets make it an attractive investment prospect. Their record backlog and clear guidance for fiscal 2026 further underscore their potential for sustained growth.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Graham Corporation's performance in the comments below.